All right, guys. So yeah, we've explored the concept of hold and how it came to be. So moving on, let's look at the hold strategy. What exactly is this hold strategy? Now, looking at how it started, you wouldn't blame the proponents of the fact that this strategy is shit, like it's nonsense. Maybe they're making a judgment based on how it started. It started from a drunken man, and I really don't blame them um, for thinking that nothing sensible can come from a drunk person. I really don't blame them, but then let's explore the strategy, because in as much as it has a very funny origin, this strategy has come to stay. I mean, it has stayed in the market, and believe me, some persons are cashing out the whole strategy. Now, it is needful to say this at this point that just like you're using a tool, if you're a graphic designer here and you use Photoshop or you use Illustrator and all of that, you would notice that sometimes, in fact most times, the design or the software is as good as the person who uses it. Now, this is what my friend always tells me. He's a badass graphic designer, and he always tell me that, see, the software is as good as the person who uses it. Two people can make a design, and this person use Canva, and you'll be amazed at what this person is going to bring out, even though you use Canva. And this person has Photoshop, and you'll be amazed at what this person is going to bring out. He might just bring out nonsense, despite the fact that he used Photoshop. The person who used Canva might do a better job than the person who's using Photoshop. So eventually, it depends on the person using the software, not exactly because of the software. Of course, the software has its own advantage, but it's dependent more on your creativity as a person. The same thing applies with cryptocurrencies when you're trading with a strategy. Now, if you followed our Zoom meeting from when we launched, you see we've had a couple of guests on the show, professional traders. Like, these guys are badass crypto traders. We've had people from Dubai. We've had another person from OKEX, and is currently with Nabo, right, country manager of Nabo. Okay, so and then these are people that have been in the crypto system for years. Like, this guy started crypto when Ethereum was still nothing, like nothing to write home about. These guys have been in crypto for years, and then they come on the show and they're telling us that there is no one way, there's no one size fit all approach to trading crypto. All right, now these people, we're going to have another guest on the show. Like, this is a whale. Like, I mean, literally, it's a whale. let's not even go there. A whale is coming on the show, guys. Please keep your fingers crossed. This is like the biggest crypto trader in Africa, believe me or not. If you've been on the WhatsApp group, I shared a picture some time ago about my boss who bought a Porsche, and then he bought a Benz 2021 model, all right, in the space of 2 weeks. Now, this is all from crypto. So this guy is a whale, believe me, and it's coming on the show in a couple of weeks. Right now, all these people will tell you that these three guys that I just mentioned, they all have different trading strategies, and each of them are profitable. Recently, the guy that came from Dubai that was on the show 2 weeks ago, he was currently on the news, and because he trades for Dubai investors, Chinese investors, and all of that. He's that good. He trades for these people, okay? And recently, he was on the news because of the kind of profit, the kind of ROI he was able to deliver in a couple of months. It was massive. Now, what I'm trying to tell you is this: these three people, all of us, we use different trading strategies, yet everybody is profitable. This is to tell you that there is no one way fit all. The strategy is as good as the trader. Okay, so now this is why the people on the other side do not believe that this holding strategy is trash. They don't believe so, because they understand the fundamental rule that the strategy is as good as the trader. You might be a day trader and you're losing serious money. You might hold and still lose money. It depends on you. So there's no one way fit all. That's why you need to go to that video and watch and find a strategy that suits you. There are so many I don't want to divert or digress, rather. There's so many factors that you're going to consider when you're choosing a strategy: your risk appetite, your funds, so many things. So guys, please, if you've not seen that video, kindly go to the YouTube channel and watch that video. Okay, so moving on, we're exploring the hold strategy. All right. So I said from the beginning that holders are more like investors, right? Now they are not exactly traders, they're traders, but they are a different kind of trader in the sense of the word. They're investors because they're not looking at quick gains. The day traders are people who make profit every day. All right. If you're a day trader, for example, you should have made a ton of money in this bear market. Excuse me, with the volatility of Bitcoin, you should have made a crazy amount of money, right? Imagine entering when Bitcoin was maybe 32, and then you're getting out when Bitcoin is at 38 or 40. All right. In fact, that particular day, I think 2 weeks ago, when Bitcoin fell and it moved back to 40 in the same day, some persons made some serious money because they are day traders. All right. But then if you're a day trader, you need a chunk of funds because you're scalping. That's what you're doing. It's as good as you're trading forex. So you're scalping. You need a lot of money for your tiny scalping and scooping to make sense. Okay, so yeah, I said people who use the hold strategy, they are investors, they're not exactly traders. All right, that is one. Now, what this means for them is that they refrain from selling in the face of declining asset prices. Now, when you're coming into the market as a holder and you're using the hold strategy, from the beginning, you're setting a sell target. All right. Let's say you're entering or you're buying Bitcoin at $1,000. Your sell target is $8,000. That is a long-term profit target, right? So if Bitcoin should move by 10%, all right, 20%, or by regardless, maybe 100%, and then the price of Bitcoin is currently at 2,000 naira, it means you really don't care. You're not looking at it. All right, you're not looking at your chart. You are just looking at, you set your sell target at $8,000. So that Bitcoin is 3,500 and everybody's rejoicing. Oh my God, hey, wow, Bitcoin, I've made profit. It's not your business. Your eyes are on the goal. Now, what does this do for you? Because every strategy has an advantage. Okay, now the holding strategy has two major advantages because it helps it will help you as a trader to avoid two things. Now, I don't know if I've dropped a video. I think I've dropped something, a write-up on the group on terminologies in crypto that you should be acquainted with. I'm going to try and drop that again for the people who just joined the group. Now, there's some terminologies you must have come across, the FUD, food, and the FOMO, all right? FUD means fear, uncertainty, and doubt. All right. Now, if in this bear market, you might have seen it a couple of times, you might have seen CZ tweeting FUD. You know, you may wonder what's meaning of this. Now, it means fear, uncertainty, and doubt. This is what causes a bear market because people are scared, people are in doubt. Okay, is Bitcoin going to come back to $1,000? You know, they're in doubt, so people are pulling out their funds. And two, FOMO. FOMO is the fear of losing out, fear of missing out, right? Okay, so that is what FOMO is. Now, how does the holding strategy help you? It helps you to avoid making these two mistakes because now, when the market is bearish, right, and there's a lot of fear and uncertainty, people are selling off their assets. Do you understand? Like a lot of people are like, okay, wow, I've lost 100K. I can't lose any much more money. So I'm just going to sell my assets. So everybody's selling. The normal tendency as an individual that you are with flesh and blood in your in your system, you would also want to sell. But as a holder, you've set your mind to make profit or to take profit at $8,000. So you're not going to be moved. All right, this is what it does for you. It helps you to prevent FUD. Now, the second thing it helps you to prevent is FOMO. The truth is, the Bitcoin market, cryptocurrency market generally, is very volatile, and this is what makes it really interesting and also risky. Now, the people who just sold out because of fear and uncertainty, as soon as Bitcoin starts rising again, these people are jumping in because they don't want to miss out. They're like, oh my God, Bitcoin is rising again. Oh, I can't afford to miss out. And they FOMO, you know, and Funny enough, this is how people lose a lot of money. They jump in and jump out, jump in and food and FOMO is always at play. The market is ruled by fear and greed. Okay, now you can as well say food is fear, then greed is FOMO. This is what rules the market generally. Any investment market, this is what rules it. So using the whole strategy prevents you from making those two mistakes, because your eyes, it's like you shut your mind from any temporary moves in that asset. You close your mind to it literally. Now, one thing I must say at this point is holding requires a lot of emotional discipline, because it's easier said than done. We're all emotional beings, and especially when it comes to money, we get really emotional with our hard-earned money, especially in Nigeria. Money is not easy to get, man. You know, if somebody is paying you 50,000, the person feels like it's doing you a whole lot of people. Like the person feels like it just helped your life. Meanwhile, 50,000 can't even cater for your basic needs as an individual right now in this economy. You know, so we are really emotionally attached to our money. So many times it takes an extraordinarily disciplined person, believe me, to adopt this strategy. It will take, as in your emotional discipline will need to be like a double dose. You can't have a natural emotional discipline, as in this is serious emotional discipline that went to Harvard. That's the kind of emotional discipline you must have for you to be a holder. Okay, now it requires a lot of emotional discipline, because and sometimes what helps, especially for most people that are holding, is that they just invest the money and they just delete the app. Now I must say this at this point, because in this bearish market, a lot of people were saying, I've stopped checking my Binance, I deleted my Trust wallet. And excuse me, it happened that on one of the crypto communities that I belong to, somebody deleted his Trust wallet and did not save his seed phrase. He didn't know where he saved the seed phrase, and he couldn't access it anymore. You see, now that is a situation that someone just lost his life savings. He just lost it. Because when you're setting up your wallet, there's always a warning. They always tell you to write down your seed phrase somewhere that you can always access it, because without it you can never access your wallet. I mean, never. It's not like your mobile application that they'll say, or your Gmail that they'll say forgotten password or forgot password. Put in your email, will send you a code. That doesn't work that way in crypto. If you delete your asset, your wallet especially, most times the exchanges don't give you a seed phrase, so you're safe. Okay, but if you delete your wallet, make sure you have the seed phrase written down somewhere safe. And this is why I always advocate for a hard copy password book. Have a hard copy password book where you can store all your crypto password and your seed phrases. Okay, that is by the way. So something that can help you as a holder is that you might want to temporarily delete the wallet. Like I said, I'm sounding it again. Especially if you're a holder, make sure you've written down your seed phrase somewhere. So when you delete your wallet, you are not tempted to, sell. You're not tempted to food. You're not tempted to sell off your assets when you see that the price of assets is dumping. Okay. So as a holder, you're not sentimental. Your eyes are on the go. Emotionalism and sensationalism is not required for holders. You can do that if you're a day trader, but as a holder, that is not required. That is going to wreck you. Okay, so now let's look at the next concept, a closer look at hold. Let's take a narrower look at what this trading strategy entails. All right, now let's look at what are the advantages. We talked about some of the advantages here. We talked about the two major advantages of using the hold strategy. Now let's look at the other side. Okay, now one more advantage I need to mention at this point is the fact that holding is simpler. Okay, for many people that are just coming into the crypto market, the best strategy that is recommended for them is the holding strategy. Okay, the holding strategy. As a matter of fact, many people, when you ask them, if not until recently, where a lot of people started learning about Binance, a lot of people started learning about Pancake Swap and all of that. But before now, the majority of people, when you ask them, are you trading cryptocurrencies? They say yes. And you ask them, okay, how? They say, I'm buying Bitcoin and I'm just holding it, waiting for the price to increase and all of that. So it's simpler. It doesn't require stress. You don't need to know technical analysis. You don't need to know fundamental analysis. All you need to do is know how to buy your coin, how to buy your crypto, or use P2P, then buy Bitcoin and just forget about it. It's that simple. So it's very simple. It's about the simplest strategy in the market. It does not require so much research and all of that. So it's very easy for newbies. All right, it's really very easy for newbies. Now, the greatest disadvantage of holding, and this is why the first school of thought believes that the approach is a lazy approach and is a very unprofitable one. Now, this is their basis of making that assumption. All right, they feel like in a volatile market like crypto, and I quite agree with them. I actually agree with both sides. Any way you want to look at it, nobody is actually wrong. Okay, so now in a volatile market like cryptocurrency, the way to make serious profit and fast profit, if you're in it for the quick profit, is to take advantage of that volatility. Right now, like I said, crypto is the notoriously volatile asset. I've said this over and over again. It's the most volatile asset in the world right now, more volatile than the forex market. It is extremely volatile. It's only in the cryptocurrency market you can see a token doing 1000% in one day and dropping back to 100% in the same day. It's only in this ecosystem that you can see pumps and dumps. Now we're going to look at pumps and dumps another day. Pumps and dumps is something that we also need to look at. Okay, so it's in this ecosystem that you can see. Of course, if you were a part of the bull run, like if you got in on all those shit coin, Safe Moon and all of that, Safe Moon Cash, blah blah blah, fake token, you can see how those tokens were pumping in a day, as in 200%. Before you know, Fed has gone back to 20%, even though yes, I bought some of them anyway too. Of course, you take advantage of the opportunities. All right, okay, so Fed has gone 200%, and by the time you're checking it in the evening, it's at minus 20, and then tomorrow you've seen 100% again. Now, in a volatile market like this, if you know what you're doing, you would make profits day after day, especially if you're a day trader. Now, this is where day traders get to, really make profits. They're taking advantage of what the small volatility every day. Now, actually, like I said, if you're in this market for the short-term gains, if you really want to make quick money from crypto, then you should take advantage of the volatility. That is, you should day trade. You should. Okay, I'll give a typical example. When you go on Binance every day, you see top gainers. You see some tokens have done 50%. You see some have done 30. You see some have done 40. Now, some persons who are very good with technical analysis, who are day traders, they take advantage of this difference. Excuse me, this price changes. Imagine if you're putting in $1,000, you're trading $1,000, and you're making 40% on one token. Let's say you have $5,000 to trade because you're a day trader. Of course, I'm gonna say this at this point. If you're a day trader, you need a bulk of money. Because you're scalping. Now, imagine if you're making 20% on $100, you're day trading with $100. That's just $20. It's not gonna make sense. So day traders usually have a huge capital, e.g. $5,000. So you're splitting this in 5 places. All right. Now you're putting $1,000 in 5 tokens. And each of those tokens, maybe one does 20%, one does 30, one does 40, one does 50, one does even 10. Now imagine, put that together and imagine how much you're making in a day. Okay, so this is the reason why, because of this potential to make extreme profit, this is the reason why a lot of people, like the people on the other side, actually feel like, oh, these people are just buying tokens and holding it for 6 months, waiting for it to pump. They're just wasting time. I mean, do you know how much money you would have made in 6 months? So yeah, this is the biggest disadvantage of this strategy. This is why a lot of people do not advocate for it, especially professional traders. Now, we've been able to explore both sides. We've seen why some people feel like it's the bomb, because like I said, it saves you from making emotional and sentimental decisions. All right, Now the other people feel like it's shit, it's a shit strategy because you're not taking advantage of the volatility. And I said that both of them are right. Nobody's actually wrong. Why did I say this? Because there are a lot of factors that determine your strategy as a trader. As a matter of fact, let me shock you right now, all right? You can actually combine both strategies. Even though sometimes it's preferable to to just stick with one strategy, especially when you're starting out. But as time goes on, as you become a professional trader, as you get better, you can actually combine strategies because there are some tokens that you can just buy for the long term. You're a holder, right? There are some tokens that you know that no, this token is going to do very well in the long term, and then you just buy them and hold while you're trading. You're trading every day on some other tokens, or you're trading you're a swing trader on some other tokens. All right. Okay, so I believe we got that. If you're still here, if you're still with me, kindly drop a comment on the Zoom chat box while we go on. We'll be wrapping up in a couple of minutes. If you also have questions, please kindly put your questions together. We'll be taking questions shortly. Should you use the hold strategy? Okay, because like I said, it's not enough to know these strategies. We've talked about the strategies, and I believe we have a basic understanding of what hold means and what it entails. But the question right now is, what should you be holding? Like, should you be holding? And if at all you're holding, what should you be holding? Right? Now, if you've been following that Zoom meeting, you will understand that I keep saying this, that like in the episode where we talked about strategy, right? Where we talked about the different strategies you could use as an investor, I said that the number one rule for trading cryptocurrencies is trade with any money you can lose. Only trade with the money you can afford to lose. Do not take your school fees, do not take your house rent and in the hope of doubling it. You might just be in for a good shock. And then I said the next one is to diversify your portfolio. Any good investor knows that the secret to making your portfolio work in the long term is simply to diversify it. And then in that episode, we talked about how you can diversify your portfolio across different asset class, across market capitalization. We talked about a whole lot of strategies there. So number one, you should note that the key to making your portfolio work in the long term, regardless of the strategy you are using, is to diversify your portfolio. And why do I say this? I said this is to mitigate risk. Everybody knows that investment is risky, trading is risky, crypto is risky, but the higher the risk, the higher your rewards. High risk equal high rewards. Okay, so because of that, to mitigate your risk, especially in the crypto market, you need to diversify your portfolio. You need to divide your capital across different classification of assets to mitigate your risk, so that if you are really losing on one particular asset class, the other asset class can make up for it. Okay, so you should put that in mind. Diversify your portfolio. That is number one. Now, number two is, how do you know when to hold and when not to hold? Now, this is based on your research. This is based on the tokens that you're holding. Remember, during the bull season, right before we entered this bear season, a lot of persons got in on shit coins. You had different Shiba Inu, Shiba Kishu, Shiba this, Shiba that. We had a lot of strange names, right? And there's so many strange tokens all over the place. And all of a sudden, I saw a lot of people. Everybody started recommending tokens. You get like people with virtually no experience is telling you, "Oh, buy this token, it's going to pump." The person doesn't. The person just hoping that it's going to pump, and people bought a lot of shit coins, and which was not exactly bad. Personally, I don't advocate for shit coins, but in the bull season, I actually had a Zoom meeting with my platform members, and someone saying save tokens everywhere also. Okay, so I had a Zoom meeting with my platform members. I had a general Zoom meeting too. That was before we launched Crypto Over Coffee, and actually showed people how to use PancakeSwap to buy these shit tokens Because for me, I said, okay, you can get it right. I'm seeing that a lot of people are cashing out on this thing. Okay, for me, I've been a bit reluctant, but yeah, since we are seeing potentials, let's get in. All right. So yes, I advocated for people to buy and get out, take profit and leave, because these things, excuse me, are shit coins. A shit coin will always be a shit coin. There's nothing you can do about it. Okay. Now, so when the bear market started, a lot of persons started saying, hold, newbies especially, hold your token, hold your shitcoin, it's gonna pump again. I'm like, really? Like, seriously? You know, I found it really funny, because the truth is, as soon as I saw that the bear market was starting, I sold all my shitcoin. I mean, all of them, all. I sold everything, because it is too risky. A shitcoin is a shitcoin, remember. It is not a solid project. It's just a coin that might be successful. Okay, fine, we've seen the success of Dogecoin and all of that. It is not a guarantee that another, because Dogecoin is successful, because Elon Musk eventually, got in on Dogecoin and is pumping it. It is not a guarantee that every other shitcoin is going to do well. Shitcoins are shitcoins. Don't be deceived. So when I saw people holding on to shitcoin, I was just laughing in what? In Spanish. Like, look at this one. Some people will cry. Some people will soon cry. Like, So when it comes to holding, knowing what to hold is key. Don't hold shitcoin. Don't hold nonsense tokens and they're saying hold, and you're shouting hold. You're going to hold to zero. You're going to hold to liquidation. Okay? So guys, the rule for hold, if you're going to be a holder, if you're using the strategy, is to know what you need to hold. Don't hold a shit coin. Do your research. I've talked about how to research a coin in our previous episode. If you need to know that, if you need to learn about that, go and watch the previous videos on the YouTube channel. You need to know what you're holding. If you're holding a solid project, all beautiful, good, you're good to go. You can hold for the next 5 years. You can hold for, as a matter of fact, on my, I have paid channel, I have subscribers to my channel. I've given them a list of tokens that they should be holding for the next, at least minimum 1 year. In fact, the long-term target of those tokens is 5 years. Like, the idea of those tokens is just buy them, forget about them. If you have money, you can just put 100K in all of them. Okay, fine, that's too much. That's like $200. You can put $100, 50K in those tokens and forget them. Seriously, in the next 1 year to 5 years, you will not believe your portfolio. Okay, so the number one rule is know what you're holding. Make sure you're not holding a shit coin. Okay, now the number two rule is this, because like I said from the beginning, the idea of holding is the profit target, and until your asset price hits that target, you're not going to sell. Right? That's the idea, which is beautiful and good. But here's how you can profit temporarily, because if you're a holder, believe me, you might feel left out, especially when we are in a bull season. You might feel left out, like, okay, you bought, because the truth is the market is the market corrects itself. This constant market correction and all of that, support and resistance and all of that, is what makes the market balance. And the truth is, you cannot just have a bull run for an exceptionally long time. The market will surely correct itself. Even when we're in a bull run, the market was constantly correcting itself. All right, so the market is not a straight line. So as a holder, you feel left out at some point, because I got in at $1,000. My profit target is $8,000, but as of now, the asset price is at $3,000. I've made 200%. Can't I just take profit? Because I'm disciplined, because I'm waiting for 8K. I don't take out profit, and the asset gets to $4,000, and then it retraces back to $2,000, and it keeps doing that. God knows when it's going to hit 8K. Do you understand? So what do you do so you don't feel left out? So you don't start having emotional clashes, like in your mind, oh, should I take out? Should I not? This is what I advise, and this is what I advocate for people to do. Generally, on my platform, whether you're a holder, whether you're a swing trader, whatever strategy you're using, I always advocate something. Always take profits. I call it the scooping mechanism. All right, I call it what? The scooping mechanism. So imagine that you have a scooping spoon and you're scooping. Now, this is what I advocate because it will help your sanity. Like I said, it's easier said than done when we are talking about hold. I like to be real. I like to be very real myself. Even me, I can hold. There are some tokens I've been doing for a long time. Like I've just closed my heart, like, oh Jesus, I cross my heart. I just in my head, I press delete and think I have this token. But there are days when I get emotional. I'm like, I beg now, waiting. You understand? So we all get emotional with our phone. So how do you maintain your sanity? So you don't go crazy and get depressed when you see that the asset hits $4,000, you could have taken profit and then it goes back again down to $500. So you don't go nuts. You use the scooping mechanism. All right. Now, and how does this work? Now, for my illustration, I said, imagine I entered BTC at $1,000. Okay. So I'm seeing that BTC has hit $2,000. What do I do? Personally, and this is why I advocate, like I said, I scoop. I make sure I take out my capital. For heaven's sake, I've made 100% profit. So the first thing I would do, even if I'm using the hold strategy, is that I'll take out the profit $1,000 first. That means for me, I have made my capital. Do you understand? It gives me peace of mind because if I take out that $1,000 and it crashes again, I didn't lose. Do you understand? I didn't lose because I'm scooping. So you take out your $1,000 and you leave the other $1,000. Let's say the market is still bullish and then it goes again. Your $1,000 goes to $2,000, goes to $3,000, goes to $5,000. You know, for me, like I said, I'll scoop again. I could take out another $2,000. As now, this is my profit. I've taken out my capital. I've taken out $2,000 profit. I have $3,000. I leave it. The market goes bullish again. It hits $4,000. It retraces back to $2,000. At that point, you see that I'm not disturbed. I'm not mentally disturbed because I'm in profit. Whether you like it or not, I am in profit. Now, if you're a critical thinker, you might want to say, oh, I'm not exactly using the whole strategy well. I really don't care. I'm trying to maintain my sanity here. Okay. Mental health is very, very important, especially in this country. You know, it's not easy to watch your money disappear before your very eyes. And you guys know how the crypto market is. It is, I mean, the crypto market can drive you crazy if you're not careful. You're seeing money, you're seeing it increase exponentially before your eyes, yet you're seeing it decrease exponentially. So it's not easy. You could just get a cardiac arrest if you're not careful. I think we have a doctor here and he can testify to that, right, doctor? I think I'm right. So crypto can give you a cardiac arrest if you're not careful. So guys, to maintain your sanity and for you to not feel left out, if you are using the hold strategy, you should scoop profit. And by doing this, now where it even gets beautiful. I said very correct. Okay, so this is where it really gets beautiful, right? If you are using the whole strategy and you're scooping profit, now you just succeeded in balancing both sides of the argument, because in the first place you're actually holding, all right, for maximum profit. But at the same time, you've silenced the naysayers who said that, or whose stand is that if you are using the whole strategy, you are not maximizing the volatility of the market. And you're like, okay, fine, I've balanced both sides. So you see, this is the way, for me personally, like that, it's a personal thing. This is how I feel that you can maximize this strategy. All right, guys, so I think we're going to stop here for tonight. I don't intend to drag this meeting for too long. Yeah, this is everything you need to know about hold. Yes, of course, this is not exhaustive. There's still a lot more, but yeah, we can take everything today. So guys, if you understood everything we've said, if you've been following, if you're still here, drop me a comment in the Zoom chat box, and then I'll be ready to take your questions. All right, we have 5 minutes to take questions, so if you have a question, feel free to drop it on the Zoom chat box and I'll be ready to take them. For your questions, I'm gonna say this at this point. I have a couple of persons and I mean not just one, asking me about technical analysis because whether you like it or not, technical analysis is very important if you are trading cryptocurrencies. In as much as you're on a platform and if you're on a platform, it does all hard work for you. Excuse me, like for me on my platform, I recommend tokens for all of my subscribers. So if you don't have time to do research and if you don't have the energy to do research, at least you're safe, right? Because there's someone doing the hard work for you. Okay, but regardless, a lot of persons are asking about technical analysis because some people really want to take advantage of the day trading, and it's not a bad idea. Like I said, at some point you should, in fact, if you're a professional trader, you should be able to combine more than one strategy, holding, combine a lot of strategy. You're doing futures, you're doing all of that and all of that. So I'm looking at organizing something in the next few months, beginning from next month, for technical analysis so that people can take advantage of day trading, futures and all of that. So guys, keep your fingers crossed. There's a lot coming on this space. And like I said, we're having a whale, like a major whale in Africa on the show in a couple of weeks. So I'm making arrangements. Currently, they are in Maldives, and yeah, so as soon as they get back to Nigeria, we should be having that session. So we're putting modalities together. So if I were you, I would stay tuned because it's going to be an explosive one. Like, it's going to be crazy. Guys, don't miss the next sessions that we're going to be having on Crypto Over Coffee. Okay, so this is all for the night. If you're on I believe everyone on this meeting or in this meeting is on the group chat. So in case you're not, I'm going to be dropping my phone number if you want to ask questions. If you want to ask questions, feel free to send me a message. All right. And then I would also be dropping the YouTube link on the group for anyone who wants to go back and rewatch all our previous videos. And I really think you should. If you're just joining in, it's going to help you a lot. Just sacrifice your data. I mean, this is free knowledge you're getting. I mean, Nigeria is crazy. We all know the situation in Nigeria currently. The earlier you decentralize your finances, the better for you. Okay, that is just my advice. Okay guys, so I can't see any question. I'm going to take the comments now. Dr. Simon says, thanks for clarifying my misunderstanding about the whole concept. You're welcome, and you guys inspire us to do more, and we would always do more. Okay, so I'm going to give 2 seconds to take more questions, but if there is no question, we'll be wrapping up this meeting in a couple of minutes. 1, 2, we'll be wrapping up, and we'll call it a day until next week. So if you're on the WhatsApp group, keep your fingers crossed. More information coming. The market is currently consolidating, and that's why we're not seeing so much activity. All right. Right now, some persons are making money. I wouldn't say a lot of people, because there are different platforms. Like I said, I talked about pump and dump. I talked about futures trading. No, there are still all the strategies that people are using to make money in this bear market. But nevertheless, the market is currently a bit quiet, and things are going to pick up pace again. All right. So, but nevertheless, you're going to be getting useful information on the WhatsApp platform. You're also going to be getting tokens that you can buy cheaply at this point, for the long term if you're holding. Okay, guys, so we're going to call it a night now. Thank you so much for being a part of this. Emmanuel David says thank you. Thank you for joining in. Thank you so much for being a part of this. I look forward to seeing you all next week. Same time, same place on Crypto Over Coffee. Have a wonderful evening. Have a great week. My name remains Ileke. See ya.